Is this Bitcoin breakout the start of a supercycle or a trap before a brutal correction? Bitcoin just smashed through another all-time high and bulls believe they're firmly in control. Euphoria is building, socials are buzzing, and everyone is talking about the next target. But here's what most people aren't considering. While this breakout is undeniably bullish and shows Bitcoin's underlying strength, we need to look beyond the hype and examine what the data actually tells us. In this video, we're diving into the minds of some of the biggest brains in the cryptoverse to see what they think Bitcoin could pull off next. I've spent hours digging through their content and analyzing both the upside and downside possibilities with data-backed research. From the proposed 50% copper tariffs to Bitcoin's historical performance, we'll break it all down to uncover what's really ahead. Stay till the end and you'll walk away with a crystal-clear picture of what to expect in the short term, the rest of 2025 and beyond. If you appreciate research-based content that cuts through the noise, show us some love by smashing that like button. It helps the channel more than you think. And don't forget to subscribe if it's your first time here. Let's get straight into it. First, let's start with the bearish scenario before we move to the bullish case. Personally, I always prefer hearing the bad news first and then ending on a good note, and I'm sure many of you feel the same way. Interestingly, the person warning about a pullback is actually a huge long-term Bitcoin bull who believes BTC could hit $1 million by 2028. Yes, I'm talking about none other than Arthur Hayes. In a recent video, I briefly mentioned his prediction of Bitcoin dumping after the big beautiful bill passed. But I wanted to dig deeper because his bearish calls often turn out to be accurate. For instance, when Bitcoin broke above 100K and everyone was screaming for 120K next, Arthur Hayes predicted the April correction down to $74,000. Back in late January 2025, he published a detailed blog post, warning that a correction was imminent. He highlighted several reasons, including tightening liquidity conditions, rising treasury yields, and geopolitical risks, especially Trump's aggressive tariff policies. Hayes pointed out that the bond market was looking fragile and open interest in Bitcoin options was sitting at dangerously high levels. According to him, all these factors combined made a pullback inevitable, and sure enough, Bitcoin dropped sharply to $74,500. So while he might sound bearish in the short term, remember, this is the same guy who sees Bitcoin reaching $1 million within the next few years. That's why it's always worth paying attention to his warnings, because even bulls like him know the ride-up is never a straight line. Arthur Hayes has now predicted that the president's massive budget bill could trigger a sharp dip in Bitcoin's price, potentially dragging it down to around 90K. This bill is aimed at slashing taxes while also raising the debt ceiling, which in practical terms means the U.S. Treasury will need to borrow a lot more money to fund these commitments. Hayes argues that as the Treasury moves to refill its general account, it will effectively drain liquidity out of the financial system. He estimates this liquidity drain to be around $500 billion, a huge amount that could temporarily pull Bitcoin down into the $90,000 to $95,000 range. In his view, this wouldn't signal the end of the bull market, but rather interrupt it for a short period before the next leg up begins. So what's my take on this? Honestly, I think his analysis has a lot of merit. Such a massive liquidity drain could create immediate selling pressure on risk assets like Bitcoin, especially given how tightly crypto is linked to overall macro liquidity flows these days. When the Treasury sucks money out of the system, cash becomes scarce, and traders often exit their most volatile positions first to free up capital. We've seen this play out before. Whenever the Treasury tightens liquidity, it tends to trigger quick corrections across markets. So while it may just be a temporary pullback, it's definitely something to keep an eye on in the weeks ahead. But beyond just this bill factor, there are several other bearish macro developments that could add fuel to the fire. For example, Trump's proposed 50% tariff on copper and sweeping reciprocal tariffs across other sectors are likely to raise input costs for manufacturers. This could either compress corporate profit margins or push inflation higher as companies pass on those costs to consumers. On top of that, core PCE inflation is expected to remain above 2.5% throughout 2025, which is well above the Fed's target. And the latest data shows that the unemployment rate has dropped further to 4.1%, signaling that the labor market is still running hot. In practical terms, this could mean the Fed has less incentive to cut rates anytime soon and might keep them elevated for longer to avoid reigniting inflation. All of this comes at a time when trade war fears are ramping up again, adding another layer of uncertainty to the markets. Rising tariffs, sticky inflation, strong employment, these are not ideal conditions for risk assets in the short term, and it's something every crypto investor should keep in mind as we navigate the coming months. That's why it might be smart to take some profits off the table. especially if altcoins follow Bitcoin and print decent gains in the coming days. Replenishing your stable stack to build up dry powder for potential dips is a smart move in such an environment. However, I wouldn't go fully bearish and insta-dump all positions either. This bill, after all, combines tax cuts with a debt ceiling increase, potentially adding $3.3 trillion to the U.S. national debt over the next decade. That means more government spending and an expanding money supply, which could weaken the U.S. dollar over time. If we do get a short-term pullback, it might actually present a solid buying opportunity, because once the Treasury finishes its refill and liquidity stabilizes, markets could very well resume their upward trend. And Arthur's long-term outlook remains extremely bullish too. He believes macro shifts like global money printing and a weakening dollar could push Bitcoin to $250,000 by the end of this year. That's an insanely bullish target, even for someone like me. Personally, while I don't think it will happen in 2025, I wouldn't rule it out for 2026. Hayes calls inflation transitory and sees Bitcoin as the ultimate hedge against a collapsing fiat system. Before we jump into the bullish prediction, make sure to follow us on X, where we share unbiased market insights and real-time analysis to keep you ahead. The link is in the description below. Alright, let's move on to the bullish prediction. This one comes from Bitquant, who has been absolutely nailing his calls this cycle, yet remains surprisingly underrated. Back in February, when Bitcoin was hovering around 100K and most people were calling for a straight move up to 150K, Bitquant predicted a sharp pullback to 76K. He was spot on, as Bitcoin ended up dropping to $74,500 in April. And that wasn't his only accurate call this cycle. Earlier, he sold Bitcoin at 74K during its previous all-time high breakout, then re-entered at 52K, capturing almost the entire move. Right now, his prediction is that Bitcoin will push past 145K in the short term, although he hasn't provided a precise timeline for when this might happen. His price targets are based on a combination of Fibonacci retracement levels, RSI readings, and open interest data. He also keeps a close watch on exchange inflows and whale accumulation patterns to refine his entries and exits. As far as I'm concerned, I don't think a $145,000 target is overly bullish at all. But we're probably not getting there in a straight line, and certainly not within a month or two. What I see as more likely is some short-term volatility, with Bitcoin potentially dipping back below 100K before ripping towards 120K and continuing its march upwards. If we don't see that dip under 100K again, then July and August could turn out to be phenomenal months. Historically, post-halving years have strong July and August rallies. September, however, tends to be choppy. My plan remains the same. I will use any upcoming rally to reposition my altcoin bags, cut down dead weight by selling into strength, and prepare for the Rektember lull. As I've said in previous videos, I expect the year to end on a bullish note, and my long-term view remains as optimistic as ever. But at the end of the day, I don't believe in marrying bags. We're here to make money, and that only happens if you actually take profits instead of just taking screenshots. What do you think happens next? Will Bitcoin dip below 100K before ripping past 125K and beyond? Drop your thoughts and strategy in the comments. I'd love to hear how you're planning this move. If you enjoyed this content, share it with your friends and don't forget to like and subscribe. Thanks for watching, and I'll see you in the next one.